If only there was a place where I could put my money and get an 8% return each year. And not only that, have it be extremely safe and secure and be virtually guaranteed. I wonder if such a thing exists. Oh, wait a minute. Index funds. Let's look at index funds today. Let's find out what index funds are, what they mean, and how they work. In today's video, we're covering index funds. So what is an index fund? Well, from my personal understanding of what an index fund is and how I would explain it as simply as possible, an index fund is like owning a small portion of all the top performing companies listed on the stock market. Why would you want to do that? Well, essentially, it's extremely safe because not only have you got the top performing companies on the stock market that you've bought a small portion of each of, but if one of those companies isn't performing as well, the other ones will carry it. So one goes down and the other ones are doing alright, it'll sort of balance itself out. Historically, the return rate of an index fund is about 7.5%. That's pretty good because inflation's only about 2% each year, so what? You're making a 5% profit, essentially, on all your investments into these things. While it's not the best return rate that you can get out there, like owning a business or buying stocks, index funds are extremely safe and they're pretty much guaranteed. While you will not see massive returns on your investments, if you keep reinvesting the dividends / profits that you make into buying more index funds, it will start to grow. So if you can put down a down payment of, I don't know, maybe a couple thousand, whatever, it doesn't really matter. If you put that down and then whatever profits you generate, you invest back into buying more, it'll keep growing quicker and quicker, more and more. And even if you have a certain amount of even if you can set aside a certain amount of a budget that you will invest into them, then you're going to start seeing some amazing growth happening. Let me make this perfectly clear, however. This method is not a quick process. You will not make huge amounts of money in the short term. This is a long-term strategy. This is more of a retirement side plan sort of thing. Your investments will keep adding up and adding up and adding up. And very soon, that small little deposit that you put down will become something really big and amazing in 30 or 40 years' time. As a matter of fact, let's do a rough calculation right now. All I've done here is I've got up a compound interest calculator on the internet. You can do this quite easily yourself. But what I've done here is just made a rough example. Now, I don't expect you guys to be able to put down 50 grand, but just for this example, we're going to be using it. So you get a rough idea of how much you could potentially make after about 40 years invested into index funds. Now, just a little heads up, I'm filming this with my phone in case you haven't noticed, and I really do apologise, but I don't have any software right now that allows me to screen share, so we're going to have to do it a little bit dodgy, and I'm just going to have to change the camera angle and basically just show you what I've got here. So as you can see here, we've got our amount invested and our interest rate and our years invested. Now for this example, I've done $50,000 and I have done an interest rate of 8%, and we are invested for 40 years. Now, if we work out our total, there's our numbers. It's pretty amazing that you can turn that amount of money into that, and essentially it requires you to do no work. You just have to be patient and consistent with it. So patience and consistency with index funds is what pays off. It will fluctuate just like stocks do, but do not sell when it goes down. Don't be afraid to just hold on and don't even try to time the market. Just buy into them whenever you can. Hold true until 30 or 40 years is up, whatever you want to do. I repeat, do not panic if they go down. Historically, index funds have always performed well. They've never gone down significantly, and if they have, they've always gone back up. So don't try to time the market, because you'll just lose money. Just buy them, stay the course, and it will pay off in the long run. Investors such as Warren Buffett swear by index funds. They require essentially zero work. You get a good return for your money, and they're extremely safe. Historically, index funds have outperformed 99% of individual investors. So with all of that in mind, I hope that has given you something to consider, and hopefully it's taught you something that you might not have known. Anyway, I'm going to finish the video here, guys. Thanks for watching, and I'll see you next time.